Well, good afternoon, everyone. This is Scott Thompson, and we are here for our Stock Investing for Beginners webcast. The bell just sounded and the market's closed. This has been a volatile few days, and our objective today is just to talk about maybe the peace of mind or the calm feelings that come from planning your trade and trading your plan. We're going to go over our open positions for both different strategies that we're trading using the moving averages. We'll give a quick update on the first two plans, which is just buying an ETF that trades in the S&P 500 or tracks the S&P 500 and Nasdaq, and then we're doing some Schwab stock slices for partial shares as part of our just ways to get started with investing. But before we do that, I want to go ahead and remind everybody that our presentation today is for informational purposes only, not a recommendation or endorsement of any particular investment strategy or stock. We do use a lot of technical analysis in this webcast, but that's not the sole means of investment research. We also use the Paper Money platform. There are some significant differences between the Paper Money and the live account. We talk about stop loss orders all the time. There's no guarantee that an execution of a stop order will be at or near the stop price. And then with the Schwab stock slices, remember that that's not a recommendation or investment advice. And there are some specific unique challenges or risks associated with partial shares. So let's go ahead and jump in to take a look at what we do in this webcast. Is we have 8 different lessons as part of our series overview. We finished these lessons up a few months ago, and then what we've been doing over the last several weeks is highlighting some different aspects of this series. Today we're going to be focusing kind of on that planning your trade and then just trading your plan, and I'll show you how to, review those open positions, and if we need to adjust some stops, we'll do that. We'll also take a look at some new buy signals that have taken place. But again, the main objective really today is to try to just understand how to deal with the volatility in the market. Sometimes the market has some major news like we've seen this weekend, and the market gaps down and then it rallies and gaps down and then rallies. And a lot of that type of price action is very, very challenging. So anyway, today we're going to be talking about just those, following the rules. So let me go ahead and share my Thinkorswim platform here. And first off, just real quick check with my tech people. How's the sound on my end? All right. So the very first plan that we introduced, and this was back in June last year, and the whole idea of stock investing for beginners is to help someone get started with investing. We have, a few different plans that we're following, one of which is just investing every day in an ETF that tracks the S&P 500 and the NASDAQ 100. And we've been investing, $5 a day, which translates into about $7.24 per trading day. And, as the market goes up and down, doesn't matter. Every single day that the market's open, we've been going in and buying a partial share or a fractional share of those tracking instruments. And we've been doing that for quite a while. Another thing that we've been doing is we've been buying or investing $50 the first day of each trading week in 10 stocks, the top 10 holdings actually of the S&P 500 / NASDAQ, with one exception because Netflix isn't in there. And we've just been doing $5 each on those. And so as the market goes up and down, like it's done pretty severely this last couple of days, we have different price points, right? Just as an example, I'm going to click on the P&L open number here on our top 10 holdings, and you can see we started back on the 9th of June last year. And if I scroll down to this week, I went ahead and, bought those 10 fractional shares in these 10 stocks. And you can kind of see the different prices at which we've gone in and bought these. This column here is the average price, and that's what's called dollar cost averaging. As the stocks have fallen, the average cost has been coming down. As the stocks have gone up, in some cases, our average price has been going up a little bit. But what's interesting to me about this that I wanted to just talk briefly about today is that, with the pullback, we've given back some of the profits that we had in this particular section of the account. We're still net positive today, and as of right now, we have 1, 2, 3, 4, 5 stocks that are actually losing money that we've been purchasing for several weeks. And so, this has gone back and forth and back and forth. Costco is kind of interesting because Costco, you can see that the mark price is up here at $1,006. And the very first purchase we made on Costco was actually at 1,008. So, I mean, basically every single week you can see that, I was buying this as the shares were coming down. We had a little bump up here in August, and it's just been down, 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 down. And then it finally started going back up again. And the last purchase on Monday was at 1,017, which was the highest purchase. Well, actually, 2 weeks ago was 1,024, which was the highest purchase price we've had. But because the stocks have been, every single week we're doing this, the average price has come down to about 943. And so we are showing a profit on that particular position right now, small, and we don't even own, this is 0.2 shares that we own on this one. So I wanted to cover these first two kind of plans just briefly to let you know that not all plans or not all investing strategies will have a stop loss. Some of them are just being systematic in how you go in and make those purchases. And I've apologized to everybody. I forgot to give a shout out to Cameron's there in the chat helping everybody out. And hello to JD and Sharon and Lawrence and Scott and everybody else that's always here. Appreciate you taking some time out of your schedule to be with me today. So the next plans, though, let me shrink this down. So those of you that have been around for several weeks probably remember when we first introduced this, what we call a 2 green arrow plan, and that's using a 50-period simple moving average and a MACD histogram. And just, high level, the rules basically are is the moving average has to be rising. So we want to buy an uptrending stock. We've been looking at mostly the S&P 100, although we've talked about expanding that out to the S&P 500, or you could include the Dow Jones, which I believe everything in the Dow Jones is already in the S&P 500, and probably the S&P 100 as well. If you wanted to look in the NASDAQ, you could kind of follow the same types of rules. In fact, today I went in and looked at some of the NASDAQ stocks. As some of those, the NASDAQ has been coming off some of the lows recently, and we may not see the moving averages rising, but we might get into the point here pretty quickly on some of the tech stocks that may trigger our sample plan number 4 that we introduced a few weeks ago when a 20-period exponential moving average crosses above a 50. And so we're going to look at our open positions on both of these types of plans. We'll talk about, if we need to adjust a stop or not. I put these scripts in the chat already. They're also, if you're watching the recording, they're in the description. But we have a column here called above the 50-day move or simple moving average and day MACD green. And what this does is just a real quick reference is I can look on this first column right here and determine whether I need to adjust a stop or not based on it going below the moving average, or if I have a new buy signal on the MACD, and those are the 2 adjustment rules that we look at. We did get stopped out of Ford, so I want to look at that one first. Let me change my study set here to the 2 green arrow with our 1% moving average envelope. I posted this script in the chat, and this script for this chart is also in the description. But let's pull up Ford. Ford we bought a few weeks ago on a nice breakout. One of the things that you want to do when you're going back and analyzing your trades is try to get an idea of, how well did you trade that? Did you buy it at the right time? Prior, and then I like to write these or draw these little green or pinkish ovals if I'm on the light colored background for Thinkorswim. But this is a great entry. I think we did a conditional order here. We saw some pretty strong resistance, multiple touch points up in that 1380 range. I think we used like 1390 or 1392. I don't remember exactly what our entry price was, but we got in and caught that momentum and felt really good at the end of the day. Then the market kind of fell back hard. We got a 2 red arrow signal. Do you see this right here? For shortly after we got in, kind of bounced around a little bit, and then we gapped down on Monday, hit the stop on what was that, Tuesday yesterday, and then we're down again today. So, you know, a stop like this is when you feel good about using a stop order. I'll be honest, you know, sometimes I hate the stops, right? You guys run into that before where you get stopped out literally by a penny or two and then the stock rallies. You know, that's just a reality of using a stop order. One thing I did want to point out with this particular stop is if we go to the monitor tab in the account statement, you can see that we, you know, got stopped out. And what I wanted to show you here is I'm just going to type in Ford up at the top and then look at the order history. And we say this all the time, but even in paper money, okay, and paper money has a tendency to fill us pretty generously. But even in paper money, you can see my stop was actually at $13.16, and we got filled in paper money at $13.06 because the stock gapped over that. And so that'll happen sometimes. Just wanted to point that out. We did get stopped out of Ford. And so we have these other positions open. And a couple things, just some thinkorswim functionality. This is really cool. If you go over here to your watch list, and I'm going to shrink this part down, and this 2GA Holdings. Now, this is a watch list that I created of our open positions, but you don't have to do that. You can actually go over here and then go up to current account positions. And if you click on that in your paper money or your live account, it'll just show you all of the positions that you have. And so, you know, I can't include all of them. So I just wanted to use the green arrow holdings, but I want to just go through this together and again, talk through the rules, maybe answer some questions along the way about this. And so I'll keep an eye on the chat there. But if you have some questions, you know, Cameron's fantastic out there, and Cameron's got a lot of great webcasts. If you haven't watched anything that he's done, please go find something that he's taught. He does an investing in dividend classes on Thursdays, getting started with thinkorswim, getting started with options. He's a fantastic instructor, and you will love to listen to him. So, but when we go over here on the watch list, some of you that are new to thinkorswim may not know this, but if you have the default setting right there, is you'll see that there's like a link or a chain link. If you click that and make it a color, then what you can do is go onto your chart and link it up there as well. So here's the link. You change that to red, and then when I click on the ticker symbol, it'll pull up that chart. And so a lot of things are going on when you first start investing. One of the challenges is just having an idea of what to do. I remember spending 15, 20 minutes on every single chart I looked at, trying to decide what to do with it. And as I refined my entry and exit rules, it started getting to a point where I could look at a chart and literally within seconds, I could know whether I needed to do something or I needed to take action. So I want to review those things with you as we go through, and we're going to look at each one of these stocks. And so what we're trying to do first is decide, number one, did it close below that 50-period moving average? Well, we have that really nice column on the monitor page. And so, I mean, let's do the quick way. So Mosaic and NVIDIA, we can see red here. So let's look at those first. And we can see that Mosaic closed below the moving average yesterday. We have a stop order right here, and it has not hit the stop yet. So the first rule is to set the initial stop 1% below the moving average. And that's what that purple line is. So like when we take a new position, which we'll do today, is we'll see where to put that stop very quickly. The second rule basically is when we get a new buy signal. So like if the moving average is rising, and like right here, let's go back a little bit. You know, right there, technically that's a new buy signal. Do you guys see that? Let me change my drawing tool here, my cursor. So right there, the MACD turned green on the 9th of February. So if we didn't already own the stock, that was a valid breakout or a valid 2 green arrow buy signal. And we could have put the stop 1% below the moving average, which on that particular day, let me shrink this over here. You know, that particular day of the moving average looks like it was about 25.56. If you just look right up there, that number right there, that's the moving average value on that day. So 25.56 would have been our stop. How do we got in there? Our initial stop looks like it was closer, on this green day when we bought it, it was down there, and our current stop is at 24.96. So let's go forward a little bit to where we are now. The stock did come down, and today we had a low of 25.62. So if you had moved your stop over here, the stop would have been missed by about 6 cents. Do you guys see that? Me personally, I usually don't like to adjust the stop with this particular investing strategy until the trend's been going for a little while. This one's been chopping around really since we got in, hasn't really done anything, and we're losing money on it. So a lot of times I like to leave that initial stop in place until the trend is started up again. In this case, if we got 2 red arrows, which happened this day, the low price there was at 25.99, and the rule says what? If we get 2 red arrows, we generally would move our stop up to 3% below the price of that low price that day. So 25.99. If I grab my calculator, 25.99 times 0.97 equals 25.21. So we could have moved our stop up to 25.21 that day. Again, 24.96 is where the current stop and the initial stop was. Today's low was 25.62. So even if we did move the stop up, we wouldn't have been stopped out yet. But again, one of the purposes I want to go through is just this: plan your trade and trade your plan. One of the nuances of really any investing plan that you create is how to manage the stops right when you first start getting in. We have a tendency, and I had this tendency when I first started as well, is I wanted to move my stop up so fast and so quickly to try to lock in just literally pennies worth of gains or dimes worth of gains. And, I'd make a little bit of money on the trade, and then I'd get stopped out of it. I'd feel pretty good as it went down, but then I would forget about the stock, and I wouldn't look at that re-entry. And what would happen is, 2 months, 3 months, 6 months down the road, I might come back and look at Mosaic, and maybe it's trading at $60. And I think to myself, oh man, I had that when it was at 30 and I got stopped out. And I don't know if any of you have run into that scenario before, but this plan will help alleviate some of that, where we set our initial stop. Like I said, I really like to let the stock kind of get a trend going before I start adjusting that initial stop. And that takes some patience. In this case, we've been in this one, about 5-6 weeks. And if I get stopped out over the next few days, so be it. And here's another big takeaway from our review of our open positions today is if you get stopped out of something and you have a loss, that loss needs to be small enough that the next moment that you get a buy signal, you feel very comfortable taking it. One of the things that I ran into when I first started investing is I was always investing too much money. And then not only was I, moving my stuff up too quickly, but sometimes I would get in and it would go down immediately because it knew I bought it, right? It would go down. And then, I didn't really want to get stopped out at where I had my stop loss. So I would move it down because I just really couldn't afford to take that loss. And I'd move it down until the loss got so painful that I got stopped out and had a devastating type of a loss. So hopefully some of these things that we're talking about today will help you become a better investor, one that has a lot more peace of mind when you're taking positions, when the market gets a little volatile like it's done the last 3 days, and you're like, hey, yeah, if I get stopped out, that's going to be a small acceptable loss, no big deal. If I get a new buy signal tomorrow, I'm ready to play the game again, right? So there's Mosaic. NVIDIA was the other one that had a red arrow. We've had a couple different purchases on NVIDIA. The current stop I have on NVIDIA is about 174.50. We almost got picked off here that day. It was 174.64. We did take a new position here, and just for kind of full disclosure, I saw the breakout that day. That was like when the market opened, was that Monday? Or no, that was, what was that? Whatever day that was. It opened up, and then it just immediately sold off, and it got really close to that initial stop. So because I had some other stock positions on NVIDIA in our paper money account, I went ahead and matched up the stock on that new purchase down to where these old ones were, again, just to try to let this sideways trend, let it do what it's going to do. And we didn't get stopped out. If this recovers, fantastic. If it doesn't, we'll get stopped out and lose some money on that one. Okay. And then Alexander's asking how to set the stop. Let me finish going through our open positions. And if there's one that I need to change, I'll show you how to change the stop. And then for sure, when we do our new purchases, I'll show you how to set that stop, Alexander. Thank you. All right. So let's go back over here, our gadget, Baker. Now, the question then is on the rest of these that we look at very quickly. We're just going to look at the right side of the chart. And really, we're looking at two things. We're looking to see if the stock's below the green line, the moving average, or if we have a new green arrow on the MACD, okay? So I'm going to change the chart here to a 3-month chart instead of 6, just so it zooms in a little bit. And the question's always the same. Do I have anything to do today on Baker Hughes? Answer, no. It's above the moving average. MACD's red. We're done. Okay? Citigroup. Now, Citigroup, this was on the list. I think we got stopped out of this one over here. You can kind of see. So I need to remove it from my 2 green arrow holdings watch list. But we did get stopped out of Citigroup. I think that was last week on this one. So we don't have anything to do there. In fact, let me just delete it. I'm going to hit delete on my keyboard, hit enter, and then it's not on that list anymore. Okay, COP. Okay, right side of the chart. Are we above the moving average? Yes. Do we have a new green arrow on the MACD? Well, fairly new. So like if you wanted to add to a position, you know, people have asked me in the course of our going over these positions and going over these rules is, you know, when do we add or when can I sell? You know, that sort of thing. Well, this is meant to be a longer term investing plan. Okay. So if, and last week we talked about scaling in a little bit where, you know, maybe we're willing to invest 500 or 1,000 or 4,000 or 10,000 or whatever the amount we're willing to invest in a new position, we could scale in. We could buy some shares here. We don't know if it's going to go up or down, but if it goes up and we get a new buy signal, we buy some more shares. So COP actually has a valid buy signal on it right now based on the rules that we had. All right. So let's put that symbol, let's write that symbol down, and we'll come back and look at that one for when we look at new purchases. Okay, let's click on Cisco. Cisco dropped below the moving average, been chopping around a little bit. We have a stop on Cisco down here at about 75 or 72.95. Right this second, Cisco is above the moving average. The moving average has been really pretty flat here, but it is rising a little bit right now. And there's a new green arrow on the MACD. So technically, I guess, that's a buy signal on Cisco. And we could look at that one. Now, this one's been a little more sideways and not trending as strongly. So here's another takeaway from our class today. You know, when you're looking at potential trades, we have limited funds, right? So most investors, when they're comparing, say, a Cisco to COP that both have new buy signals or fairly recent buy signals, they might look for something that's in a group, okay, like we've been doing the top-down analysis over the last few weeks. They might look for a sector or industry group that's outperforming the S&P 500. Energy has been one of those that's outperforming over the last 3 months, and COP's in energy. Cisco's more tech, right? And tech has not been outperforming. In fact, they've been underperforming. So, you know, that might be a deciding factor for some people when they're looking at a new purchase or a new buy signal, okay? But the question still is the same. Do we have anything to do here on Cisco today? Because the stock's been trading flat, for me, we're just going to leave our stock here or our stop order where it is until this trend resumes. And that may never happen. It may just come back down and hit the stop. So be it. All right. DuPont. Oops. So DuPont over here. Again, questions are pretty easy. Is it above the moving average? Yes. Is the MACD green? Nope. We're done. That's all. That's as long as it takes to analyze these. Right? Gilead. Okay. Above the moving average. MACD's red. Nothing to do. We don't have to adjust our existing stop, and there's no new buy signal. Johnson & Johnson. Okay, above the moving average, MACD's red, nothing new to do here either. Now, I do want to show you this one. People are, again, asking all the time, well, when do we sell stuff? Well, again, the point of this system, this strategy is to buy and hold the trend as long as the trend is up. This stock has been above that 50-day moving average for 170 days. Okay. It's been longer than when we bought it. We made our first purchase on this back in August of 25. Okay. So again, I don't know how long this is going to trend. If we sold it at this last high in January, I would have missed out on this here. If I sold it here at 251.71, I'd be pretty happy probably right this second. But unless I'm just really on top of it, it's maybe going to be hard to get back in this. And certainly with my new buy signal, it may be higher than 251 next time, which is still okay to purchase up there. But it's, this is a longer term investing plan. And Johnson & Johnson, let me zoom out just real quick on this one, go out to a 1-year chart. This crossed the moving average back in July of 25. We bought it there on the 8th, although we could have bought it probably this day right there. That was really the first buy signal day, in my opinion, based on the rules that we're covering right now. Is there about the 16th of July, okay? But we're trying to catch this type of trend. I don't know if it'll keep going or not. And the mistake I would make in the past is I would move my stop up too tight, and I'd get stopped out when it'd pull back for 2 or 3 or 4 days. And there's so many times that's happened since we got in here that, if the younger me, when 20 years ago, when I first started, 25 years ago, I would have been knocked out of these little pullbacks, and it would have driven me crazy to look at the stock today and think, oh, that's at 245. I owned it back here at 170. Okay. So this plan, again, is designed to kind of help us get over some of those fears that we run into. All right. So that's looking at J&J. Let's go back to a 3-month chart here. Mosaic we looked at earlier. It has the 2 red arrows. MU. Okay, MU, above the moving average. MACD's red. We're done with our analysis. There's nothing to do here. NEE. This is a fairly new purchase. We bought it back here a few days ago, last week. It's above the moving average. Stops here. MACD's red. You know what? End of the day, even that end of the day, we had a green arrow in our class probably on this rule, but when it filled the next morning, traded down and the MACD turned red. I'm not going to close the position down because that happened. I'm going to let the stop do its job. Okay, we looked at NVIDIA already. Occidental. Okay, this is another energy company. Stock's above the moving average. MACD's actually green. This gave a new buy signal back there on the 19th of February. So we could have moved our stop up there. Again, that's like extra work for me. I usually just wait until I get 2 red arrows and then I'll move the stop up. But, some people like to move their stop up more frequently. And again, if you're going to do that, the stop rule is if you get a new buy signal, if we didn't already own it, we could have bought it this day on the 19th, and our stop would have been there at about whatever that is, 42.70-ish. Okay. RTX, write this symbol down. RTX has a fairly new buy signal, 2 green arrows here with the MACD just recently. It gapped up, broke out. Now it's coming back down. Let me draw a little line here. Here's some technical information for you new technicians. Old resistance becomes sometimes what? New support. So, technical traders will look for this area of old resistance to become that new support, and hopefully this will hold. Another little technical thing is when we have a small body with a little longer shadow there on the bottom, we call that a hammer candle pattern. The body today is also inside yesterday's body, which is called a bullish harami. So there's a lot of bullish signs right here. Doesn't mean it will not keep going down, but there's some things here that suggest that this level will hold. If it doesn't, in our rule set, the stop would go down here below this. But this is one we're going to come back and look at as well for a new possible buy signal or add to our position. All right. Now, there's been some questions come through here. Alexander says, so wouldn't you take some profit here? Okay. This is such a good question, and it's so hard, to do this. But remember our Johnson & Johnson? Looking at the year, when would you have taken profit? Well, obviously, we know where the highs are going to be, right? So we would have taken profit here. And then obviously we would have bought it again down here at the bottom. And obviously we would have taken profit here at the very top. And obviously we would have gotten back in. That's not how it works. You know, I tried to do that. The big takeaway for our class today is to plan your trade and trade your plan. Every single rule set, every single plan you're going to have is going to have some pros and cons. What's the con or the challenge with this type of rule set? Well, sometimes the stock's going to be at 251, and we're not even going to adjust our stop until it drops down $20 and goes below this level. Now, that's not for everybody, but this rule set allows us to stay in there. You know, if we're in RTX, should we take some profit on RTX? Well, not based on the rules. Now, you can add some rules that have a profit-taking mechanism. I just trying to point out some of the challenges of doing that is you may not get an opportunity to buy back in until the stock's actually above where you sold it, okay? So there's one question there. A couple others. Let's see. Patrick Conway answered there, so thanks for that. All right. So let's keep going. RTX, write that symbol down because we want to come back around to that one to look at new buys. Valero. Now, Valero, we bought on a breakout over here. The MACD was green. The MACD is green again. So this is actually a new buy signal here 3 days ago. It's way up there. This was up 3.6% today. And so this is still a valid buy signal, but it's a little extended. And some traders may not like to get in this far away from the moving average, or when the stock has moved that far above where the last entry signal was, okay? But it is a valid buy signal based on the rule set. It just forced you to buy fewer shares probably because it costs more, all right? Williams, WMB, let me go back to this 3-month chart here. You know, WMB above the rising moving average. MACD turned red today. Do we do anything today with, well, we got a red arrow. Nope, the rule says we wait for 2 red arrows. If it goes below the moving average, then we adjust the stop. So there's nothing to do on WMB. Walmart, same story, above the moving average. MACD's red, but not 2 red arrows, so we don't do anything here. And then finally on ExxonMobil, MACD's red, stock's above the moving average. Again, no adjustment rule needs to be made here, okay? So that's going through our open positions there. Alexander says, assuming you have a video on when to even find these opportunities. Yes, the last 3 or 4 weeks, we've been doing a whole lot of searching for how to find these stocks. So you go back and watch that at the end of our session. I'll show you there on our Trader Talks page where that is. But yes, we've done a number of different videos on how to find the stocks we're reviewing right now. All right. So we're on the 2 green arrow. Let's go ahead and go back and visit a few. We talked about COP, right? So COP, nice strong uptrend. Stock went up and gapped up, pulling back. If we draw a little resistance line here where these last highs were, you know, some traders would look at the MACD and think, well, the last time the MACD rolled down like it did, it kind of went sideways a little bit. Sometimes the stock will pull back. And so what we're doing is we're trying to determine, do we want to buy, you know, COP that has a valid buy signal based on our rules, or RTX, which we looked at just a moment ago. RTX broke out here a couple days ago, came back down. Looks like we're trading kind of near that old resistance level that might become new support. So that's a potential choice for us. Or we don't have this one. Target, when I was looking through. So Alexander, part of your answer is I looked through the S&P 100 stocks and came across Target. And I thought to myself, well, Target has a rising moving average. MACD just turned green today. So guess what? That's a valid buy signal on Target. And I don't have Target in here. So the other ones we have already. So I'm going to go ahead and trade this one. So let's go through the mechanics on this. So in order to buy a stock, okay, we have some things that we like to know. We're pretending that our portfolio is like $10,000 and we're investing up to 5% of our portfolio in any one stock position. So we can invest about $500 in any one trade. So today the stock closed at 120.08. So if I wanted to invest up to $500, I could probably go about what, 4, maybe 5, well, it's about 4 shares, right? It'd be $480. And so if I wanted to buy $480 worth, let me shrink this down over here a minute. So in my stop, where do we put our stop? The rule says to put the stop 1% below the 50-period moving average. And this study set that I've shared with you has that dashed purple line at your stop level. Okay, so in this case, it's at 107.32. So I'm going to go in here, right click. So Alexander, earlier you asked how to set an order. Here's how you do it. Right click. We're going to do a buy custom with a stop. And then it pulls up this order window in Thinkorswim. And we're going to go over here to the left side, and we're going to go with 4 shares because we said we could invest up to $500. And that's just a rule that we said at the very beginning of our class. I'm going to click this little broken link here and lock those up so that when I change the purchase, the sell changes as well. We're going to do a limit order at the close. Okay, so the closing price was 120.08. So we're going to go in here 120.08. And the market's closed now, so we'll go ahead and make this good till canceled. I don't know if that order will fill tomorrow or the next day, but we'll make it good till canceled. You'll see that broken link there. I can lock those up as well. And our stop order, the default stop order is going to be about $1 below whatever you put for the purchase, but our stop's going to be up there at 107.32. So we're going to put our stop order at 107.32. And it's already good till canceled. It's a stop order. We hit confirm and send, and it doesn't say send and send. It says confirm and send. So we're just going to double check. We want to buy 4 shares at a 120. We're going to sell 4 shares at a stop of 107.32. And there's no guarantee that we get filled at 107.32. At the beginning of class, I showed you even in paper money, it gapped over our stop and we got filled a little bit lower. So it could be significantly lower too. Then last thing I like to check is right here, the buying power that just tells me the total investment. You could look here too. And I just want to make sure that's not over 500. And if you have groups set up like I do, I'm going to put it in our 2 green arrow group and send that order off. So that order will be a working order for tomorrow. Okay. So that's how we do that. All right, so we have a few more minutes here, so I can do a couple more examples. I wanted to look at CF. CF's another one that I was looking through the watch list, that S&P, I think 500 watch list in this case, and I don't own CF. So I wanted to use a couple stocks where we didn't own those. And is this a valid buy signal? Okay, so how do we know? Well, is the moving average rising? Yeah, I think we will look at that and say that moving average is rising. Is the MACD green? Yep, MACD turned green 3 days ago. We could have gotten in there at the closing price of 104.30. Today it's a little bit higher than that, but it's still a valid buy signal. So common question, Alexander, for you specifically, and anybody else that's fairly new to this webcast, how long are the buy signals valid? Well, in this system or this set of rules, the green arrows are green until they turn red. So, this moving average has been green since way back here in January 8th, and it's still green. Okay, MACD just turned green 3 days ago. It'll probably turn red over the next 5, 6, 7 days, probably. And that's okay. When things turn red, we just look for the opportunity to go green again. Okay, so let's purchase this one as well. And I'm going to go through this a little bit more quickly because I want to go through more examples. So how do we do it? Okay, we put our cursor about there at the close, right click, buy custom with stop. Okay, we get our order over here. We do some quick in our head math. If I can invest $500, stock's trading about 104. So I'm probably not going to be able to do 5 shares. So I'll do 4 shares. Again, normally we don't like to go over that set amount that we've determined. So we'll go with 4 shares. The moving average envelope is at 88.59. How do I know that? Just look right here at that number to the right. It's right underneath studies. But it says 88.59. That's where our 1% below the moving average stop goes. So we'll do that. But first, let me change the limit to our close price, 104.71. 104.71. Make that good till canceled. We're going to set our stop, we said where? 88.59. That's good till canceled. We hit send and send or confirm and send. Confirm and send. Review the order. 4 shares, check our stop, check our total purchase price, stop not guaranteed to get filled at that level, put it in our group, send the order off for a working order for tomorrow. All right. So let's take a look here. I do want to take one. We did our crossover. We have 4 stocks in our crossover. So Apple, ALC, EHC, and KHC. This is a new system that we talked about last time. And you can see Apple's actually dropped below the moving average here, but it hasn't hit our stop. Our stop's at 247.78, and we're at 262 right now. So that initial stop's doing its job. I want to show you a couple things here, and then we'll wrap up. Okay. Let me change our study set to this two moving average crossover, 20 EMA and 50 SMA. I did chat this in, that's also in the description, but what I wanted to show you here is something really interesting that I saw with Comcast. Okay, CMCSA. Now, the crossover, actually, you can see over here was back what? When did that cross? Looks like it probably crossed there about the 19th of December. And I wasn't watching it, nor did I introduce this plan back then. But that's when we could have bought the, stock based on our rules. But sometimes the stock will continue to trend for months. So we added an additional rule here. And the rule I want to talk about is when it closes below the moving average, when it goes back above the moving average, that's another valid buy signal. Or if it bounces off the moving average, like it's done a couple times here. So this stock, I mean, ideally it would have been to buy it 3 or 4 days ago when it closed back above the moving average on the 27th of February. But today it had a really strong bounce off of here. Again, I don't know if this is going to continue or not, but let's place an order on this one to buy the shares here about 32.09. The initial stop rule on this plan is the same as it was, 1% below the moving average, which the moving average is at 29.62. So we need to figure out a couple things here, and then we'll wrap up. So 29.52, that's where the moving average is, times 0.99. So 29.22 is going to be our stop price. So let's go ahead, right click, buy custom with stop. And 29.22 is our stop price here. And we'll make that good till canceled. And our purchase price, we're going to use that 32.09 close. Now the question is, well, how many shares can we buy? Well, this plan that we introduced a couple weeks ago, we're investing up to $1,000. So we'll take 1,000 divided by 32. And it's late in the day and my brain doesn't work anymore. So we need to take 1,000 on our calculator, not in my head, divide by 32.09. And we can go with 31 shares. So we're going to change this to 31. And we've got those linked up. So those will be 31 to buy, 31 to sell. Hit confirm and send. And we have 2 green arrows here. Check our stop. Check the total purchase amount. And this one we're going to put down in our 20 EMA crossover plan and send that off. All right. So Alexander's asking how we got the 29.22 stop. The moving average is at 29.62. You can see the green number over here on the right. And so the stop rule for this plan was to set the stop 1% below the 50-period moving average. All right. Let me go over here to our Trader Talks page. Cameron's probably chatted this in already, but if you go to YouTube/@Trader Talks webcast, you can see all of our trading plan or trading webcasts here. If you scroll down, those 8 lessons I talked about are right here, Stock Investing Basics. And you can go look at lesson 1 through 8 to get a feel for kind of what we're doing. And then if you go over here to the playlist page, this is where we have all the playlists for all of our webcasts. And right here near the top is the Stock Investing for Beginners, our full playlist. And you can see all the classes we've done, and particularly for Alexander, searching for buy signals. So, this one we did some on how to find the stocks that we talked about today. Go back and watch that one. That's a great one to watch there. All right. So hopefully that's helpful for you today, everybody. Go back into your paper money and practice. Hopefully you've already got some positions put on and you can practice adjusting those stops. If you're new to investing and want to see those rules in play, just decide what you want to use for your buy signal or your exit signal, and then paper trade that like 10 times. And then go back and evaluate, is that plan working for you? Does it make sense? Do you understand when to buy? Do you understand how to adjust the stop? And things like that. Now, as always, let me just pull up this last, this one we did from a few weeks ago. This particular webcast, and I do this with all the webcasts, is if you have a question, you can post them here. Cameron's done a great job in the chat here. So I'll go back through and take a look. If there's other questions, I might go ahead and put them in here. But feel free to chat in your own questions. I'll answer them, and you can take a look at them there. Okay? So have a great day, everybody, and thanks for being here. We'll see you.